let's not kid ourselves. They are still way too stimulative for what developments are and what forecasts are.
You're right, there has been some concern about why we don't ask people at that 5-day period to get tested. That is something that is now under consideration. The CDC is very well aware that there has been some pushback about that.
My argument is, why should 2022 be any different from 2021? Sure, it's not going to be as exciting in terms of the explosion of earnings growth with base effects, but the nominal GDP picture is very strong. You've got big tech anchoring 40% of the index.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Good morning and welcome to Bloomberg Surveillance Early Edition. I'm Tom McKenzie in London, standing in for Francine Lacqua. Here is what's coming up on today's programme. New year, same questions. Investors weigh the impact of Omicron on the global recovery. Many markets, including the UK, remain shut. Turkish inflation blows past expectations to hit a 19-year high. That's amid a slumping lira and lower borrowing costs. And a boost for Elon Musk. Tesla smashes its delivery record, shipping over 300,000 vehicles in the fourth quarter. Let's check in on the markets on the front foot here in Europe, with the caveat, of course, that the UK is closed. In Asia, it was a little mixed. You had Japan closed, China closed, some pressure over in Hong Kong on the property stocks. Asia PMI, though, suggesting that manufacturing is coming back. Some of those supply chain issues being worked out for the manufacturers in Asia. And the future stateside pointing positive. Here's what you're getting then. Gains of 0.6%, almost 3 points on the benchmark. The DAX is up 0.8. The S&P futures gaining 0.4%. We're looking at iron ore as well, gaining 1% there. The context, of course, is that 2021 you saw gains of what? 24, 25% for European equities, 27% for the S&P 500, just 14% for the UK. Does that kind of momentum continue? The consensus suggests that you get further upside for these equities, but possibly not in the range that we saw in 2021. 3 straight years of double-digit growth for the S&P 500. Let's switch it on and see how things are playing out then across the European space. By the way, when it comes to the sectors, it's autos that are near the top of the list, if not at the top of the list, followed by the likes of banks. Autos getting a boost from those numbers out of Tesla. The UK is closed, so just kind of walk past that for the moment. The DAX is gaining 0.8%. You're seeing optimism over in France as well. The CAC Garonne up 0.9%. We're talking about the politics of France as well, heading to that election in April, and President Emmanuel Macron taking over the presidency, or France at least, of the EU for the next 6 months. So green across the screen here in Europe, amid the context, of course, that you're going to get thin trading because it still remains a holiday in a number of these countries. Let's switch focus to what is happening then in terms of Omicron. There is an argument, maybe, that you can start to fade that risk, but we'll get more details. The number of new COVID cases in the US is, quote, unprecedented. That's as the new year begins. Here's what we've been hearing then.
It's been very difficult to really predict on a weekly basis how cases are going to go. There's some data out of South Africa showing that the surges have fallen off as fast as they increased. Hopefully that's going to happen in other places as well, too.
I hate to say we throw in the towel and accept that everyone gets it. That's not what we want to do, because we still don't know what the long-term impacts will be. I think we've got to double down on the masking. We've got to really emphasize and encourage vaccinations.
Antibodies are the body's natural defense molecules. After you've been vaccinated or infected, your body spreads lots of antibodies all over the body to protect yourself against getting reinfected. So with modern technologies, we can go in and sample the blood and pull out infection-fighting cells, white blood cells, and we can make a single antibody that can do the job for a particular virus. So that single antibody is called a monoclonal antibody.
The reality is, if we continue with having so many places and populations not vaccinated, we will continue with this pandemic. And in fact, maybe we'll need to jab ourselves more often.
Okay, some virus experts there with the latest on Omicron. Let's get to Bloomberg's healthcare reporter, Tim Lowe. Tim, where do we stand in terms of Omicron, the spread, the severity? 10 million cases just in the last 7 days.
Right. As you point out, the numbers are unprecedented. And after 2 years of being so focused on case numbers, I think a lot of us are quite alarmed to see 500,000 cases in one day in the U.S., 200,000 cases in France in a single day. These are truly alarming numbers. But the flip side is the hospitalization rates don't seem to be going up. Fatality rates don't seem to be going up. There's a lot of data points piling up that the Omicron variant doesn't seem to hit as hard as the previous variants. So over the holidays, just more good news on that front. There's still the question, however, of what these massive surges in cases can mean for society. It can hit in other ways with, as we saw last week in the U.S., airlines being canceled left and right because the crews had tested positive. So in the short term, you're seeing a lot of countries questioning whether they can shorten the self-isolation time for people in order to prevent just mass sectors of the economy from shutting down due to infections. And hoping that the toll on society in terms of hospitalizations and whatnot will continue to not go up.
Yeah. Okay, Bloomberg's Tim Lowe on the latest when it comes to Omicron. What seems to be a picture where health services are not yet under the same kind of pressure they have been in previous waves, but in terms of services, and you're seeing that, as Tim mentioned, certainly in the travel sector with many airlines having to cut and cancel thousands of flights, that is very significant indeed. In fact, we had one hospital here in London that had to effectively close because of lack of staff testing positive for that variant. Okay, let's get more on all of this, the economic impacts with Moritz Kramer, LBBW Chief Economist and Head of Research. Moritz, thank you. Happy New Year. Thank you for joining us. What is your assessment so far of the economic impacts of Omicron and how it draws us forward to the rest of 2022 with a particular focus on Europe?
Yes, well, thank you very much and Happy New Year to you as well. The latest variant, Omicron, will not have the same impact as the first waves have. We learned to live with the virus. We know as a society how to better react to it, but most of all, we do have a vaccine that gives us some protection, not absolute protection, but some. But still, what we've been seeing in Europe specifically is a large increase in numbers. We've seen more restrictions on social activities in many countries, in most countries really, and close to lockdown in some. And what I expect for next year, or well, it's now this year, I have to adjust my wording here, but is a slower economy than what we otherwise would have seen, but not dramatically. So for the Eurozone overall, we still see 4.5% of growth for this year. For Germany, a little less. Germany is on top of all this Omicron uncertainty, also particularly impacted by another problem, which is the supply chain disruption, because it's a manufacturing hub and it depends much more on international trade than its European peers. So overall, I think it's manageable, but in the longer term, I would want to echo what we've just heard in the statement from the lady from Baylor College. We cannot just go on like this, lurching from variant to variant and sort of happily expecting that the next wave will be an even milder variant than the previous one. I think we need to remind ourselves constantly that no one is safe until everyone is safe on this planet and is vaccinated. And it's no coincidence that the Omicron variant is coming from a part of the world which has very low vaccination levels. And I think we really need to level up on this on a global scale. This is sort of a very good investment for all of us. If we can get sort of all the poor countries sort of thoroughly vaccinated as well, then the likelihood of more disruptions like what we're seeing right now is greatly minimized for our economic, social, and health benefits.
Moritz, there are, of course, the linkages between the variant, between the pandemic and the question of inflation. You touched on supply chains there. Where are we in terms of price normalization? Do you expect to see price normalization over the next 12 months?
We do indeed. What we're seeing is for the coming year a reduction in inflation. We've all been surprised on the upside, especially the ECB, who greatly revised upwards the 2022 estimate for inflation. I think too much. I have a lower estimate for inflation in the coming year, or in this year, so much of it is energy driven. We know that currently there is, for example, on the gas market there is a decline in prices, which is very important for Europe. We're also seeing a slight reduction in oil prices. So all in all things considered, we're seeing inflation going down towards the 2% target by the end of 2022. However, I would also say that what we've heard in December from the ECB about the policy orientation really is a little bit, hanging too much weight on this 1.8 forecast of inflation for 23 and 24. It really is too close to the target to continue a policy that is really targeted or calibrated for a scenario where we're fighting deflation. So I think the ECB needs to get out of this corner and start to have a clearer vision on how to normalize and communicate this more clearly.
Okay, Moritz Kramer, on the importance for the ECB of trying to have to adjust their view to these new inflation, this new inflation pandemic, or trajectory, I should say, as a result, partly of the pandemic. Moritz Kramer, LBBW Chief Economist, Head of Research, will stay with us. We'll get his views on China and how that plays across as well to the European economy for 2022, just in the next few minutes. Just to bring to your attention, Tesla, this is the big corporate story of the day for us. And pre-market, this stock is climbing 6%. That is after the company made these deliveries for the final quarter of more than 300,000. Tesla delivering almost 1 million vehicles in 2021, working through these supply chain issues and these demands around semiconductors to continue very, very significant deliveries. The main, of course, the market leader when it comes to EVs, and just building on that position in 2021. Investors rewarding that company in the pre-market gains now of almost 7%, as you can see, for Tesla. We'll bring you more on that story as we get it. Coming up, Chinese developer shares are tumbling following reports that China's Evergrande Group has been ordered to tear down a number of apartment blocks in sunny Hainan. We'll bring you the latest. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Tom Mackenzie in London. Shares of Chinese property developers tumbled earlier. That was after reports that China Evergrande has been ordered to tear down apartment blocks in Hainan province. Evergrande halted trading in its shares, but that didn't stop other property developers such as Sunac and Shumao from taking a steep dive. Let's get the latest on this now with Chief Asia Economics correspondent Enda Coren out of Hong Kong. Enda, what does this signal then, this move by these local officials in Hainan, about the wider property market and the pressures that it continues to face as we get into 2022?
Well, it's certainly a very jittery start to the year, Tom, no doubt about it. It all comes from local news reports on Hainan Island saying that Evergrande has been ordered, like you mentioned, by the local authorities to tear down around 39 apartments there that were said to have been built illegally. Evergrande did suspend its share trading in Hong Kong, but it didn't say or give any reason as to why. As you mentioned, of course, the spillover then did impact other property developers. We saw share prices tumble across the board. I think at the very least what it does do is it reminds people that the China real estate story still has a way to play out even as policymakers switch to support. Our own colleagues have calculated that China's property developers are on the hook for about 200 billion worth of repayments from bond principal payments through to deferred wages in January alone. So there's still plenty to keep an eye on when it comes to the China real estate shakeout.
Okay, Enda, thank you for the update on the travails of Evergrande, that call for them to tear down some of their apartments in Hainan province, where many Chinese go to holiday. Ender Curran, Chief Asia Economics Correspondent out of Hong Kong. And still with us is Moritz Kramer, LBBW Chief Economist and Head of Research. Moritz, I know you've been doing a deep dive into the economy of China. The key question for me, amongst all the nuances regarding regulations of tech and property and everything else that's going on, is will China step up and be a key driver of growth globally in 2022?
China will still, together with the rest of emerging Asia, be a growth driver for the world economy. At the same time, we need to understand that the Chinese growth model that we have seen over the last decades is not sustainable. It's been driven by investment to a level that is just not sustainable. So China has invested around between 40 and 45% of its GDP reinvested into the economy for decades. No country has ever done that before. And this went hand in hand with a massive growth of credit and of indebtedness of the corporate sector. So before the financial crisis, the corporate sector in China was indebted to around 100% of Chinese GDP. It's now well over 200%. There's been a huge credit boom. There's been a wave, a tsunami of investments, and it's simply the case now that we're running out of these really good projects, whether real estate or infrastructure or anything else, because you have declining returns, obviously, and the fact that we're seeing this glut of real estate is just a very powerful reminder of that. So China needs to change its growth model in order to continue to play this locomotive role for the world economy and bring up productivity growth, which has been slumping over the last years, because China was pursuing such an extensive growth model rather than trying to create a more efficient economy and delegate more powers and authority of decision making to the local level. So I think here we are seeing the limits, throw in the adverse demographics of a rapidly aging society, and I think we're seeing a clear picture where the growth rates going forward will be much more modest unless China really changes its growth strategy.
Okay, Moritz, unfortunately we've run out of time, but your assessments and your analysis of China and its role globally, of course, very much valued indeed. Happy New Year to you. Thank you for joining us. Moritz Kramer, LBBW Chief Economist and Head of Research on the importance of China confronting this new economic dynamic within that country. Coming up, France is taking over the EU rotating presidency in January. That's going to be for 6 months. It's a difficult time, a challenging time for President Emmanuel Macron, who's facing elections in April. What is at stake and how much power will France really have? We'll get the latest next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. France is taking over the EU rotating presidency. This as the country gears up for elections in April. Caroline Conan has more from Paris.
The French colours will dominate the EU stage for the next 6 months. An opportunity for the pro-European President Emmanuel Macron to push his vision in Brussels at a time when the new German Chancellor is getting his bearings.
The country holding the presidency, especially of France, which is a founding member state, one of the big member states of the EU, has, I would say, influence, not power as such, but we can have influence on the agenda, influence on the priorities.
Concretely, France will preside over the EU Council, consisting of the heads of states and governments of the 27 EU members. The Council sets out the priorities and approves key decisions.
We must move from a Europe of cooperation within our borders to a powerful Europe on the world stage, fully sovereign, free of its choices, and master of its destiny.
To put his French touch on the agenda, Macron is proposing an EU minimum wage, a carbon tax at the EU border, a Schengen reform, and an independent European defense. Macron wants to push for a common European force of 5,000 to be deployed quickly that will be discussed at a defense summit in March. A key issue for him after France lost a huge submarine contract last year. But a few domestic and international challenges could derail his agenda. First, the fishing spat and the increased tensions with a former member of the EU, the United Kingdom. The ongoing COVID crisis and the threat of the new variants could also impact EU growth.
When it comes to holding the presidency of the Council, you are de facto a bit more leader than you are usually. But it's not just a matter of Merkel leaving. I think he will use this presidency to find results and show his leadership skills to his counterparts.
Politically, the last and potentially greatest challenge for Emmanuel Macron will be the elections taking place in April. If he loses, a deep Eurosceptic like far right-wing candidates Marine Le Pen or Éric Zemmour could even end up presiding over the EU. Caroline Conant, Bloomberg News, Paris.
And that was our Caroline Conant there. Coming up, with Omicron still complicating plans, we look at what's next for the stock market after another record-setting year. That's as markets here in Europe post gains of 0.5% and futures stateside point to upside of 0.4. Plenty more ahead. This is Bloomberg. Welcome back. A new year, same questions. Investors weigh the impact of Omicron on the global recovery. Many markets, including the UK, remain shut. Turkish inflation blows past expectations to hit a 19-year high. That's amid a slumping lira and lower borrowing costs. And a boost for Elon Musk. Tesla smashes its delivery record, shipping over 300,000 vehicles in the fourth quarter. Shares rise in pre-market trade. Good morning and welcome to Bloomberg Surveillance Early Edition. I'm Tom Mackenzie, stepping in for Francine Lacqua here in London. Let's check in then on the markets, which remain on a front foot today, the first real day of trading, with a number of countries still closed for the holiday season. The European Stock 600 gaining 0.5%. The UK is closed. China, Japan also closed, as was Australia. Futures stateside pointing to gains as well, 0.4. You're seeing some solid demand and optimism, certainly reflected in what's happening in Germany. The DAX up 0.7. And as I said, futures up almost 20 points stateside. So reversing some of the more modest losses that we saw on the last day of trade, the 31st. The context, of course, that you saw gains of 27% for the S&P 500 in 2021. 3 straight years now of double-digit gains for US equities. Let's switch focus then to all things equities and what's moving these asset prices. After the great global attempt to reopen in 2021, investors then looking to the next 12 months with, of course, the Omicron variant still complicating plans. Some things are very clear. Inflation remains a key concern, as do growth prospects and global interest rates. So what is next for the stock market after a record-setting year?
This pandemic, at the very least, won't be something that's finished with a sort of line in the sand. And we're still very much in the midst of the storm. And I think some of the issues that plagued us in 2021 will continue in 2022.
I'm not optimistic yet about the service sector outlook in China in the short term, especially when China seems to be continuing with its zero COVID strategy.
The Chinese stock market is very volatile and not something that's suitable for everyone. I think we see better outlook for China probably in the second half of the year in the run-up to the NPC at the end of 2022.
A lot of the big caps and some of the stocks that benefited most from the FOMO or the fear of missing out, I think you're going to see a little bit of a pullback there.
The difficulty is now, though, is that we're looking at earnings growth that is, petering out into 2022. It's not going to be negative, but it's not going to be as strong as years gone by.
I think that's going to be a big rotation that we see as we start this year, where a lot of the underperformers actually rally and outperform what was the end of last year's winner.
Okay, to run through everything investors are thinking about for 2022, Lynn Thomason, our managing editor for EMEA Markets, joins us now. Lynn, run through then some of the key themes, some of the things that are top of mind for investors this year.
Absolutely, sure. So I think, the first one has to be probably inflation. It's getting the most attention. If you look at the market calls and outlook pieces for 2022, everyone's looking at how do you play it, how do you grapple with it. How long is it going to last? The transitory debate, where I think, people have agreed that it's not transitory, but there's still a lot of debate over how long exactly we're going to have to contend with these higher inflation rates.
How are investors thinking about the pandemic? There's a view from some, it seems almost a consensus view from investors now, that we can almost look through Omicron, that the severity is not something to be concerned about, and yet you only need to look at the airlines in the US to see the very real impact when you have a shortage of labour.
Absolutely, and I think that's a really interesting divergence between sort of the consensus market view and what's continuing to happen. We've heard time and time again that strategists believe the value plays, the underloved markets are going to win out as the pandemic fades. But yet again, I think you're continuing to see Omicron surprise people as to how long it's lasting, and the fact that it's pushing people to work from home again. And tech, I think, amidst all of that, is continuing to be very strong.
OK, Lynn Thomason, our managing editor for EMEA Markets, on some of the key themes that investors are weighing up as we get into 2022. Thank you. Let's get the Bloomberg First Word News now with Laura Wright. Laura.
Thanks, Tom. President Biden has reaffirmed US support for Ukraine's sovereignty in a call with the country's president, Volodymyr Zelensky. In a statement, the White House says the US and allies will respond decisively if Russia does invade Ukraine. Sanctions on Russian banks and commodity exports are among measures recently discussed. Goldman Sachs is asking US employees to work from home if they can until January the 18th. The move comes after most of the bank's major peers, including JP Morgan Chase and Citigroup, adopted a more cautious stance as the Omicron variant spreads rapidly across the nation. Goldman has been one of Wall Street's fiercest champions of getting its staff back into offices. US airlines are greeting the new year with more than 6,500 weekend flight cancellations, closing out a bumpy holiday season for travelers. A winter storm sweeping eastwards and staff shortages caused by the rapid spread of the Omicron variant are adding to problems for carriers. Tracking firm FlightAware.com says more than 1,300 flights are already dropped for Monday. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Tom.
Laura, thank you. OK, switching focus to Turkey now. Inflation surging to a 19-year high in December after accelerating for a 7th month. Prices rose year on year by 36%, far higher than estimates of around 27%. That reading coming off the back of the slump in the lira. Of course, that was very pronounced towards the end of last year. And President Erdogan's push for cheaper borrowing. Bloomberg's Simin Demirkan joins us from Istanbul on the latest. Simin, what is driving then this acceleration, continued acceleration, 7 straight months in consumer prices?
Yeah, hi. Annual consumer inflation, as you said, has risen to 36% in December. This has been propelled by a slump in the lira and also President Erdogan's push for cheaper borrowing costs. Some economists we've been speaking to say they expect inflation to continue accelerating until around May or June. Of course, the Turkish Central Bank, encouraged by President Erdogan, has been easing since September, cutting rates by 500 basis points. President Erdogan says he wants low rates to boost economic activity and transform the country into an industrial powerhouse. He also believes that high rates actually spurs inflation rather than prevents it. Of course, this now leaves the Turkish Central Bank in a difficult position. The benchmark rate is at 14%, while annual inflation is at 36%, the lowest real yield among emerging markets at negative 22%. Of course, the lira has also been plunging. Last year, it lost 44% of its value, the worst performer in emerging market currencies and its worst performance in about 2 decades.
OK, Simin, that is the top line on all of this and the key data that we should be focused on. On the ground, you're there, you're living this every day. What does it look like?
Well, we're seeing price hikes on an almost daily basis. Some Turkish households are actually saying that they're struggling to buy basic goods, from bread to eggs to red meat to fish. And just over the weekend, Turkey added to the inflation pressure by announcing that it was going to raise electricity and natural gas prices. So now some Turkish households are going to see their electricity bills surge by 130%. Now, the opposition party is calling for early elections because it's saying that the government is completely out of touch with the economic challenges facing the Turkish nation. President Erdogan denies this and says that elections will continue as scheduled in 2023.
Okay, Bloomberg's Simin Demirkan on the impacts of that very high inflationary print and what it means, of course, for the political future of President Erdogan. Coming up, energy prices in Europe continue to drop. That's after that historic rally in December. We'll discuss the outlook for power next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Tom Mackenzie in London. Let's get your Bloomberg Business Flash now with Laura Wright. Laura.
Thanks, Tom. China Evergrande shares have been suspended from trading in Hong Kong pending an announcement containing inside information. The move follows local media reports that the company has been ordered to tear down apartment blocks in a development in the Hainan province because a building permit was illegally obtained. AT&T and Verizon have rejected a US request to delay this week's launch of a new variation of 5G mobile service that airlines say might interfere with aircraft electronics. The CEOs of the two companies, though, say they would be willing to pause developments for 6 months near certain airports. The industry maintains power levels are low enough to avoid interference. The latest Spider-Man film has held on to its top box office spots in North America for the third week in a row. No Way Home generated nearly $53 million over the weekend in the US and Canada, according to projections by Sony. Comscore estimates North American cinemas took around $4.5 billion in 2021, a big jump from 2020, but still a fraction of the $11 billion they were seeing pre-pandemic. That's the Bloomberg Business Flash. Tom.
Okay, Laura, thank you. European energy prices are continuing to drop this morning, but that's after an historic rally, of course, that we saw in December that could leave longer-term scars in the market. Joining me to discuss is Bloomberg's gas and power reporter in Frankfurt, Vanessa de Zem. Vanessa, Happy New Year. Thank you for joining us. What can you tell us then about where we are then on this natural gas story?
Well, natural gas prices in Europe started the year extending the sharp drop seen the last month, especially in the last couple of weeks. And that's because rising flows is concerned that supplies could lack during the winter, especially during the coldest days. So now we are seeing that benchmark European gas prices for next month dropped as much as more than 6% today. And it is actually the 90th day in the longest streak of losses in 7 years. So it was, and the interesting part of it is that before Christmas, we got record high prices. So it is a bit volatile.
Yeah, just a bit volatile, to say the least. How does Asia factor into this? Because the pricing in Asia has traditionally been higher than Europe, and that is part of the factor as to why you see a lot of US LNG going to Asia. But that started to change in the last few weeks. What is the role of Asia?
Yeah, so what happens is that Europe now is able to attract more vessels, more LNG vessels, especially from the US, while in Asia, stockpiles have increased and demand was not so strong. So what is happening is that more LNG tankers are heading to Europe instead of Asia because it's worth it. So it does poses a certain risk that at some point, if it gets very cold in Asia, or for example, we saw during the weekend that Indonesia has paused coal shipments in January, and that could increase LNG needs, in Asia also. So if you see demand increasing in Asia again, we're probably going to see these LNG vessels diverting again, and that's how. So Asia and Europe has competed for this LNG supplies.
A zigzag pattern for these carriers from the US as they negotiate and navigate between Europe and Asia. What about the role of Gazprom and Moscow and Russia?
Gazprom has delivered gas supplies to Europe, but not extra supplies, which is much needed for the continent to face the winter months ahead. So the Russian company Gazprom has been sending only as much gas to European clients as it's obliged to under long-term contracts. And the role is now that everybody's looking into Gazprom moves. Gas shipments into Germany through this very important pipeline has been halted for 14 days now. So it adds uncertainties. And actually, Russian supplies are very important to the continent, very important to Europe, even though more LNG vessels are heading to Europe. That's still traders are looking forward to see what Russia decides.
Yeah, absolutely. The impact there of all these different factors on what you describe rightly as very volatile gas prices. Bloomberg's Vanessa Dezem on the latest there around the gas markets. Thank you. Coming up, Tesla smashing its previous record for global deliveries. It caps a year where the company joined the $1 trillion valuation club. We'll get the latest next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Tom Mackenzie in London, stepping in for Francine Lacqua. OK, Tesla has smashed its previous record for global deliveries. It caps a year where the company joined the $1 trillion valuation club. Shares are up this morning in pre-market trading, up 7%, as you can see. Joining us now is Bloomberg's Laura Wright. Laura, a big pre-market move then. What were the key takeaways from these quite extraordinary delivery numbers?
Yeah, fantastic start to the year for Tesla, rallying now 7% in pre-market trading. That's because fourth quarter deliveries came in at just over 308,000, surpassing the previous record set in the last quarter. For 2021 overall, total deliveries almost 1 million, up 87% year over year. So really phenomenal from Tesla. This is primarily because of deliveries of their Model 3 and Model Y. Now, Tesla's engineers have been agile. They've been able to adjust their software to work with any semiconductors that they can get their hands on. More broadly for the industry, semiconductors have been the Achilles heel, limiting new production, curtailing new technology in cars, which is why we've seen such an explosion in the second-hand car market. Although Elon Musk is a polarizing figure, Tesla is volatile, it's highly valued. Tesla is proving that it can really execute on that future growth model for investors.
What's the read across to its European competitors then, and how have analysts been thinking about this delivery number?
Well, starting with the analysts, we can expect a number of price target and EPS revisions going forward. Dan Ives from Wedbush Securities, in a note to clients, his key takeaway was that this blew away even bull case expectations, and the numbers were truly jaw-dropping. We are seeing a read across here in European markets this morning, with autos and parts the best performing sector, up 1.8%, and European competitors such as Volkswagen, Porsche, Volvo cars experiencing buying in the green. Tom.
Yeah, a boost there for the auto sector from Tesla. Thank you, Bloomberg's Laura Wright. Now, this week will mark the one-year anniversary of the storming of the US Capitol. And members of the House panel investigating that deadly riot say Donald Trump's actions show the former president is unfit for future office and could be held criminally responsible.
This is a man who has demonstrated that he is at war with the rule of law. He's demonstrated that he's willing to blow through every guardrail of democracy. We're in a situation where people have got to understand the danger of President Trump.
And that was Liz Cheney. Joining us now for more is our executive editor for international government, Rosalind Mattison. Ros, what are we expecting this week then as we near that one-year anniversary?
Well, there'll be a number of events this week to mark that anniversary. President Joe Biden and Vice President Kamala Harris both plan to speak at the Capitol, and the House Speaker Nancy Pelosi has said she plans to observe the attacks at the Capitol, although the chamber will not be in session. And of course, the former President Donald Trump, who was in office when this happened, is planning a news conference at his Mar-a-Lago resort in Florida, where he plans to repeat yet again his claims that the November 2020 presidential election was rigged. So there will be quite a contrast between that, for example, his news conference in Florida, and no doubt will be fairly somber events being held in Washington this week.
OK, Ros Mattison on what is expected ahead of that January the 6th marking, of course, of the storming of the Capitol. Rosalind, as we still have, you had a little bit more time. What are the political dimensions then for both the Democrats and Republicans wrestling with this issue?
Well, of course, it's coming as we're heading into a mid-year election year in the US. The elections are in November for Congress and about a third of the Senate, but campaigning is already starting to gear up for that. Interestingly, there was a poll out over the weekend showing that 1 in 3 Americans say violence against the government can at times be justified. More of those were in the Republican camp and white Americans, which just shows how polarized America is and remains, and how many people think the Jan 6 riots were in a way justified or acceptable. So you've got that backdrop coming into the midterms this year, and of course the focus on current events, which is that the Democrats are still trying to get through President Biden's domestic economic agenda. The window to get that done before the campaigning really gears up for the midterms is closing. And of course, Democrats are still arguing amongst themselves about those provisions. The Senate Majority Leader, Chuck Schumer, wants to bring a revised version of that $2 trillion package to a vote as soon as this month, very much aware, again, that that window is narrowing to get that through before it gets mixed up in the whole campaigning for the midterms. So you've got all those threads running through US politics in the coming months, and of course a very polarized voting base in America that will probably only get exacerbated by that. And interestingly, of course, over all of that is the question, does Donald Trump decide to try and run again in 2024?
That is a question we are all waiting for. Ros Mattison on that one-year marking, of course, of the rioting in and around the Capitol and the implications, the read across for the 2022 midterm elections as well. Your markets right now, optimistic tone across these markets. The UK is closed. Gains across the benchmark Europe Stock 600 of 0.5%. It's a similar picture in terms of the futures stateside. Gains of 0.5 as well. In terms of your sectors here in Europe, as Laura was saying, it's autos that are at the top of the list, up 1.7%. At the bottom, you've got tech down 0.2. Healthcare also under a bit of pressure. There's plenty more coming up. Bloomberg Surveillance, early edition, continues in the next hour with Matt Miller in Berlin, Kailey Leinz in New York, and Anna Edwards in London. This is Bloomberg.
Let's not kid ourselves. They are still way too stimulative for what developments are and what forecasts are.
You're right, there has been some concern about why we don't ask people at that 5-day period to get tested. That is something that is now under consideration.
My argument is, why should 2022 be any different from 2021?
This is Bloomberg Surveillance, early edition, with Anna Edwards, Matt Miller, and Kailey Leinz.
It is 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong on this Monday, January the 3rd. Our top stories today. Back to work, but from home. Goldman Sachs joins the ranks of companies asking employees to stay home as Omicron surges. Airlines warn of flight delays after AT&T and Verizon reject a government safety request to postpone new 5G services. And Tesla delivers. The electric car maker smashes Wall Street estimates with a record number of deliveries. Happy New Year, everybody. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards, live in London with Matt Miller in Berlin and Kailey Leinz in New York. Kailey, we made it. It is 2022. That feels good enough, perhaps, in itself. European equity markets making some modest gains, although without London, we're not here in London quite into the full swing of 2022 just yet. And some of the Asian markets were a little under par today, under volume.
Yeah, absolutely, Anna, because you did still have New Year's holidays in markets like China and Japan, which were closed for trading today. But for other markets, it was the first trading day of 2022. In Hong Kong, it wasn't necessarily a good start to the year. The Hang Seng Index was down, and a big drag within that was actually the property sector. That index down more than 1 percentage point. Evergrande shares halted on reports that it was asked to demolish about 39 buildings in one province in particular. So that weighed on property stocks overnight. And then you also had tech stocks underperforming, and Alibaba, a big laggard within that. That stock down about 3.3%. There's concern about more conversion of its ADRs to Hong Kong shares and the possibility that that would actually mean investors start selling more stock. One upside I would point to, though, in Asia is Taiwan. That index of stocks hitting a record high, and that in turn is helping the Taiwan dollar, which was stronger by about 0.2%. It is now approaching its strongest level against the greenback going back to 1997, right now at 27.61. Now, here in the U.S., we are coming off of a very, very strong year for the equity market, 27% gain over the course of 2021, and the gains continue on this first trading day of the new year. At least it looks like that, judging by futures trading right now. S&P 500 futures up about 0.5%. Now, because Japan was closed and the U.K. is closed, there is no cash trading for treasuries just yet, so we have to take a look at futures, which are under a little bit of pressure this morning. The dollar, though, is stronger, and then I would point to crude coming off of its best year since 2009, Matt, and WTI is up about 1.25% this morning, above 76 a barrel. Libyan production really the key here. That looks like the supply will be coming down because of damage due to a pipeline. And of course, we're looking ahead to that OPEC Plus meeting beginning tomorrow, Matt.
Yeah, definitely watching that for any moves in oil. We're still hovering around 1-month highs, but it's interesting to see, will be interesting to see what they do. In terms of the European trade, we are all open, except for this island nation right here. You know, a lot of people have been saying no government does it right in terms of COVID policy. The UK does it right in terms of holiday policy. They give you a holiday during the week for any holiday that falls on the weekend, which I think is only fair. In any case, no trade there, so pay no mind. We see green across pretty much the rest of the screen, certainly in the core of Europe. The DAX up 0.7%, the CAC up 0.9%. So the Stock 600, the broader European benchmark, is up right now, although you have to discount the fact that UK stocks aren't trading, and it's only 0.5%. You have German bonds right now, the yield coming down a little bit, but still at negative 18 basis points, so climbing closer and closer to the zero level. If you step back and take a big picture look, the euro dollar not moving much, but still at 113.57, so about 0.5 cent higher than we were looking at most days last week. Bitcoin is on the way up, but still 47,102, so 20 grand off of its all-time high that we reached, I think, November 9th in terms of a closing high. November 9th, we were at 67,000 and change. So Bitcoin still suffering some big losses as we enter 2022. It doesn't feel like it's quite yet started, right? It doesn't feel like everyone's gotten quite into motion yet.
It certainly doesn't feel that way here in London, Matt. Ireland also on or have a day off today, I should point out. So you can refer to the islands, plural, on your map. Let's get to a look ahead, though, at what is to come this week, because even if we're making a slow start to things, we do have a busy week ahead of us. Tomorrow, OPEC Plus will meet to decide on output. Then on Wednesday, we'll get the FOMC minutes, so no slow start to the week in that sense. We're right into it with central bank minutes. Friday, we'll get US payrolls reports, so lots of data coming, and also Eurozone CPI. We'll also get a lot of Fed speakers throughout the week with Bullard, Daly and Bostic all set to speak. That tends to fall a little bit later on during this week then, Kailey.
Yeah, so we'll keep an eye on monetary policy, Anna, but of course we'll also keep an eye on fiscal policy here in the U.S. because Senate Democrats begin the new year today groping for a path forward on President Biden's stalled domestic economic agenda, hoping to pass a slimmed-down version before midterm election campaigns begin. Anne-Marie Horder, and Bloomberg Washington correspondent, joins us now from D.C. Anne-Marie, are we at a different point now than we were when Joe Manchin said he was a no on this just a few weeks ago?
Not exactly. It's really the same story in a new year. But Senator Schumer wants to really push Senator Manchin to negotiate. And that's why Senator Schumer already said that he was going to bring a vote of Build Back Better for January. But Kailey, it really remains to be seen if that's going to work, because remember, the Senate had said they were going to do that before Christmas. Christmas came and went, and we still did not get a vote. What is shaping up, when you can hear a little bit on the Sunday shows, that potentially there is some wiggle room in the Senate trying to meet Senator Schumer's demands. Before he walked away, he had introduced a $1.8 trillion package to President Biden. Really, two of the key issues that the senator takes is that if they're going to be a program, they fund it for the full 10 years, like the child tax credits. Although that's very popular in America, it's only funded for another year. So he says if you're going to do a program, we fund it for 10 years. And that means you have to slim down a number of programs or just cut some entirely.
Anne-Marie, two things. First of all, it's great to see you. And Happy New Year's to you, my friend. Secondly, I'm wondering, what's the government's role in this whole 5G spat? I mean, if it is dangerous to launch this new variation of 5G, if that puts the lives of U.S. air travelers at risk, doesn't the government have to step in and stop it? And if not, what's all the hubbub about?
Well, that's the big question now that the U.S. government is going to be waking up to, specifically the Secretary of Transportation, Pete Buttigieg, as well as the Federal Aviation Administration, how they left it in response to that letter you're talking about, Matt. They sent last week, and we got a response from AT&T and Verizon, which said that this is the detriment of mobile services. There was an off-ramp in there, though, in their response. They said potentially they can hold off on that 5G network installation, the start of that is going to start in just 2 days, right? It's going to be starting on January 5th. They said potentially on some major airports they can hold off. But already what we heard from the Department of Transportation and the Federal Aviation Administration is that they're going to review the response from the wireless industry, and then they are going to lean in and make sure it's going to be about priority of the safety of travelers and the aviation industry. So it does look like the mood music is moving to what the aviation industry is pushing for. It's going to likely come down in Washington, of course, when you get the politics involved, to the safety of individuals and travelers.
Anne-Marie, thank you very much. Yeah, we have some European example to fall back on here, which is interesting. 5G rollout already taken place in some geographies, but the aviation sector would say it's not in use in exactly the same way, so it's not entirely comparable. Thanks to Anne-Marie, though, for her reporting in Washington. Now, Tesla has smashed its previous record with global deliveries. It caps a year where the company joined the $1 trillion valuation club. Joining us now with details is Bloomberg's Laura Wright. Good morning, Laura. So a big pre-market move for Tesla. What are the key takeaways from the numbers?
Yeah, massive pre-market move. Tesla rallying 7% right now. That is because fourth quarter deliveries came in at just over 308,000, setting a new quarterly record, surpassing the last record set in the previous quarter. For 2021 overall, total deliveries came in at just under 1 million, up 87% year on year. And that phenomenal number came from primarily Model 3 and Y deliveries. Tesla's engineers have been astute at navigating the semiconductor shortage. They've adapted software so that it works with any semiconductors that they can get their hands on. Now, semiconductors have been the Achilles heel for the industry more broadly, and that explains production shortages, limitations in new technology. That's why we've seen such an explosion in the second-hand car market overall.
Well, and I noticed, I was watching you on television earlier this morning, Laura, and you pointed out that the automakers have done the best of any industry group on the Stock 600 today. Is that in response to this news? How have the European competitors to Tesla, which are also launching massive EV pushes, doing?
Yeah, autos and parts, the best performing sector in the stock 600 right now. We're also seeing a read across in other stocks such as VW, Volvo, Porsche. One analyst from Wedbush Securities, Dan Ives, his top takeaway in a letter to clients was that this blew away even bull case expectations. Yes, Elon Musk is polarizing. Yes, Tesla is volatile. Yes, it's highly valued. But Tesla is proving that it can execute on its promise of future growth for investors. Matt, I'll let you in on a secret. My New Year's resolution is to test drive every Tesla model. I thought you'd like to know that.
Wow, that's a cool resolution.
That's a solid resolution, one that I'm sure has Matt Miller's full support. There you go. It definitely does. Bloomberg's Laura Wright, thank you very much for the update. Now, shares of Chinese developers dropped today after local media reported that China Evergrande Group has been ordered to tear down apartment blocks in a development in Hainan province. Evergrande trading has since been halted. For more, Bloomberg's Tom McKenzie joins us. Tom, good morning to you. So a new year, some new things to trade around, but some of the old stories, some hangovers, if you like, from 2021 still with us. Evergrande and property is one of those.
Yeah, Evergrande is still the bellwether when it comes to China's property sector and the curbs that the government's being put in place. And because they've been relatively opaque about how this is actually implemented, we look for any signs as to whether they're easing or cracking down further. And this has really knocked to that confidence. And that's why you're seeing the broader index for property stocks down almost 3% in the Asian session in Hong Kong. Now, Evergrande, as you said, has halted trading. They haven't come out with anything specific, but what they have said is they're going to come out with more information about some insider information. What we do know is their local newspaper reports that they've been asked to pull down something like 36 buildings in Hainan province, which is hailed as the kind of Hawaii of China. Some would dispute that, but nonetheless, it's a holiday. It's possibly Hawaiians. They might be top of the list. But certainly, you know, this is obviously significant in terms of, you know, where we see this playing out. The bigger picture is January is a key month for property developers across China. $200 billion worth of obligations that they have to meet.
A lot of bills that need to be paid. Thank you so much to Bloomberg's Tom McKenzie for that breakdown. And now let's get back to the markets here in the U.S. and take a look at some stocks moving in pre-market trading. One big mover to the downside is CNH Industrial, down about 11.4%. And that is after the official spin-off of its Iveco truck and bus unit actually is now official. That unit debuted in Milan earlier today, but this stock in the U.S. down as a result. Now, one upside mover I wanted to point to is Hertz. Of course, a few months back, it announced that deal to buy 100,000 Teslas for its rental car fleet. It was up as much as 3% earlier on, now is essentially flat, but investors may be trying to figure out how much Hertz had to do with that delivery picture we saw for Tesla in the fourth quarter. And one other stock I did want to make mention of is AMC, a third straight really strong weekend for the new Spider-Man movie, which admittedly I still haven't seen, Anna, but it caps off a year which was difficult for movies, but seems to be getting a little bit better. 2021 pulling in $4.5 billion for the movie theaters in terms of revenue. That is a lot better than 2020. AMC up about 2% before the bell, Anna.
I hear it's good. People in my house don't like spiders, which makes it a little difficult to drum up enthusiasm. Right, coming up on the programme, Kailey, Eurasia's top risks for 2022. This hour, we'll speak with the Eurasia Chairman, Cliff Kupchan, and Eurasia Senior Advisor, Diana Fox Carney. A lot to talk about with them. We'll go through their 2022 outlook, really fascinating on the geopolitics and on the environment. We continue the conversation with Ian Bremer, Elizabeth Economy of the Hoover Institute, and others. All of that coming up later. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Anna Edwards in London and Kailey Leinz in New York. Now, of course, we're taking stock of everything that happened in 2021 to help us look forward into 2022. A couple of the commodities we're focused on have been gold. It had a particularly weak year in 21, and oil, its best year in a decade. This is WTI, West Texas Intermediate, NYMEX crude, but of course, Brent also did well. This maybe says a lot about what Mr. Market or Mrs. Market or some other kind of market expects in terms of growth in this coming year. And gold may also say something about what the market expects in terms of inflation. Let's get over to Eddie Vandervald of Bloomberg Markets Live. He joins us right now to talk about it. Why are we also seemingly worried about 2022 when the oil market is telling us we're set up pretty good?
Yeah, I mean, the oil market is saying that. We have seen this comeback, but don't forget, I mean, oil was really heavily supported by OPEC action last year. And I think that's going to be the theme of 2022 as well. I think what we're going to see this year is that OPEC is just going to keep prices relatively stable. They're quite happy with these levels. It doesn't make the US president too mad, and they can live with these prices. So I think we see too much of a rally. I think OPEC pumps. If I think, I think, and if prices pull back, then I think OPEC cuts. I think OPEC is really going to act as the central banker for the oil market this year.
Eddie, good morning to you. Happy New Year. Something that gets less attention from the White House, but gets a lot of attention from Eddie Vanderveld, I know, is the price of gold. And I mean, something of a disappointment to you, perhaps, last year. How have you been reflecting on this over the New Year period?
It absolutely will have disappointed the bulls. I mean, look, you had inflation running really, really hard last year. And then at the same time, you've got rates sitting at historic lows. So you've got the real rates environment, which should be extremely supportive for gold. Gold, of course, is a metal which doesn't pay a yield and at the same time is seen as an inflation hedge. So this was really textbook environment for gold. So a lot of people were very disappointed not to see it doing better. I think it was down something like 3.5% last year. But I think there's risk this year as well, because as the central bankers start raising rates and the inflation perhaps start coming off, I think the environment is really precarious for gold this year.
Eddie, how do dollar dynamics work into all of this, given that the consensus seems to be a stronger greenback, at least through the beginning part of 2022?
Yeah, and I think that weighs more on gold than it does on oil. I think that a stronger greenback is perhaps the most telling factor when you look at the historic correlations for gold. That is the biggest driver of the gold price, tick by tick, day by day. And I think if we do see that dollar rally, as many expect into this year, then absolutely that's going to weigh on gold. It's going to weigh less on with the oil price, because the oil price is far more driven by dynamics. And I think if we see world travel coming back to anything like it was pre-2020, then I think oil will stay stable even if the dollar rallies.
OK, we made it then, Eddie, into 2022. How do we look set up to you in terms of risk assets? What kind of risk appetite do you go into 2022 with, given that what we're seeing on Omicron and the same old questions that we still can't quite answer on that front?
Yeah, look, we've been asking our readers on Markets Live a lot about what they think about next year. We asked them at the first 2 weeks of December, and there was a lot of concern still about inflation, about central bank policy, a lot about just about the Omicron variant and so on. But I think there's a lot to be optimistic about for this year, right? If you think about this, there's three factors I'd highlight. One is that we just have there's a lot less unknowns right out there. Number two, central bankers have given themselves a lot of room for surprising with dovish policy. And then at the same time, I think the world just knows how to deal with the virus a little bit better. So I think there's a lot to be optimistic for this year.
Hoping for no unknown unknowns then. Eddie, thank you very much. Eddie Vanderveld, Bloomberg Markets Live. Thanks very much for joining us so early in the new year. Remember, you can get market analysis. Check out the Markets Live blog, MLIV Go. That is the place to go on your terminal. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller in Berlin and Kailey Leinz in New York. So far, so good then for European stocks, Matt, in 2022. We're not very far into the year, I appreciate, and the London market hasn't even started yet. But broadly, we are making gains. Interesting, our colleague Heather Burke on the Markets Live blog asking just how much support, though, we'll get from growing profitability of European corporates this year. That was a crucial underpinning of stock market strength last year. But if you look at wages and inflation, you have to ask whether that continues.
Yeah, especially if inflation starts to eat in to those things. On a side note, I love Heather Burke's work. I've been following her reporting for at least a decade now. And she's right. You know, this is one of the most important issues. We talk so much about inflation and the Fed, monetary policy, COVID, et cetera, but it all comes down to earnings at the end of the day, right? So, and the multiple that investors are willing to put on them. So it's important to watch that. I'm not sure exactly what we're expecting from European earnings. In terms of the U.S., last week, an informal poll yielded 8, 9, maybe even 10% earnings in 2022.
Yeah, you wonder how they'll cope with the headwinds of 2022. Kailey, what are you seeing then pre-market in the United States?
Well, we are in positive territory. It does look like we are starting the new year on the front foot. I would note it's a little bit of a better picture, actually, in Europe, as you mentioned, Anna. The Stock 600 right now trading at an all-time high. When it comes to S&P 500 futures, we are still just shy of that record we hit last week. Right now, they're up about 0.6% at 47.86. The high last week was 47.93 on a closing basis. Of course, as Anna mentioned, UK markets are closed. Also, we're closed in Japan, so we haven't gotten any cash trading of treasuries yet. We just have to take a look at futures, which are under some pressure. Down about 3 basis points. And then, of course, pointing to crude as well. Best year since 2009 in 2021. The question is, how far can those gains continue in the year ahead? They are at least continuing at the start of the new year, up 1.4%, 1.3% on WTI to 76.22 a barrel. Now, as for some stocks to watch in pre-market trading, the really big stock story, individuals stock story this morning is Tesla, up 6.6% before the bell after that blowout fourth quarter deliveries report. More than 308,000 cars that blew away expectations and brought its total for the year up 87% compared to 2020. You also are getting some movement across the car and EV space. Stellantis is up the better part of 3%. Lucid Group, another EV maker, up by about 2%. And then ChargePoint Holdings, which deals in the EV charging space, is higher by about 1.9%, Matt.
All right, Kailey, thanks very much for that look at the markets. Let's get to geopolitics now, because Eurasia Group has released its report on the top risks of 2022, ranging from zero COVID to Turkey. Cliff Kupchan, Eurasia Group Chairman, joins us now for more. And Cliff, you know, one of the interesting things has been, of late, we've been following the Biden-Putin call and what's Russia doing with so many troops on the border of Ukraine. Niall Ferguson writes an opinion piece for us saying basically that Biden and the EU are not going to stop Vladimir Putin's invasion of Ukraine, that it's going to happen. How does Eurasia Group see this conflict?
Well, it's our 5th risk this year, and thank you for having me. It's a dangerous situation. Putin has amassed troops on the border. He's also demanding kind of undoable revisions to European security. We differ from Niall. We think that this will be solved by diplomacy. We think there are areas where the two can reach agreement, where Putin can be fed, a tacit agreement not to let Ukraine into NATO. They're not getting in anyway for the foreseeable future. The U.S. could agree to limit weapons supplies to Ukraine, which is what he really cares about. He really doesn't want NATO weapons on his border. And NATO could agree, in turn, not to mass so many troops on his border during exercises. Now, that indeed may not feed Vladimir Putin. I spent a lot of time around Putin. He's kind of tough to feed. If he does invade Ukraine, we will get very severe U.S. sanctions against him. But on balance, I think this can be resolved diplomatically.
Okay, Cliff, good morning to you. That's interesting. You say it can be resolved because when you look at the list of demands that President Putin has put forward recently, they don't all look like things that Europe or NATO more exactly could agree to, putting a sort of Russian limit on NATO expansion. But you think there is a path through then?
I don't think those can be resolved. There's no way that a weak President Biden with approval ratings in the 40 going into an election year, he's got COVID on his hands, he's preoccupied. He is not going to, he's going to have to give something to Putin. But he can't give the future of Poland, Hungary, the Czech Republic, Kazakhstan, and the rest of them. That's not going to happen. I don't think that Putin, again, having spent a lot of time around these guys, I don't think Putin and his advisors are expecting that NATO is going to backwalk NATO enlargement. I think he's really going for more concrete limits on NATO missiles, on U.S. troops, and on respect. Look, it's been a bad year for Vlad so far. We've all been focusing on Beijing. I think he wants some respect right now, and I think that's part of it. So just showing up will go some distance, but I also think there are things we can give him.
Okay, I mean, yes, we should point out that he, Putin is talking here about some European Union member states, isn't he? For the Baltic states and also Poland. So these things come quite close to, very close to the heart of Europe, Cliff. We talked to you about Russia because of your expertise, your background, and your deep experience in that part of the world. But at the top of the Eurasia list this year in terms of risks is China, and it's actually the zero COVID policy that China has adopted, which seemed to be such a success in the early months of the pandemic, if we can remember that far back, but now it's turning into a real barrier in terms of China rejoining the rest of the world, if you like. Try to tell us why you put this one at the top.
We put it at the top because we think that China's in a very difficult position right now, facing what I would call a triple challenge, a public health challenge, because they're not going to have a good time, probably going to fail to contain COVID using social distancing, using lockdowns. Secondly, a political challenge because Xi Jinping has attached himself, intimately to the zero COVID policy. If it takes a hit, his political standing could take a hit. Not that he's going to fall, that's not going to happen, but it's going to be difficult for him. Third, an economic challenge. Zero COVID, the lockdowns are going to take a real economic toll on the Chinese economy. They will be met with fiscal measures, which in turn will unravel a lot of the reforms China's achieved over recent years. So the lead in our lead piece is indeed that China gets hit on COVID.
How much of a parallel, Cliff, can we draw between what is going on with Russia in Ukraine and China looking out beyond its given borders to places like Taiwan, the South China Sea, and territorial disputes in that region specifically?
I think that there is a parallel in that you have smart, aggressive, ambitious, and at times quite dangerous leaders. Dangerous because they're so tied to nationalism in both countries. The other interesting thing to me about the common viewpoint is that each considers the land in question to be his. I have heard Putin in person explain so many times that, yes, I respect Ukraine's independence, but you have to understand it's kind of ours. Xi Jinping, on the other hand, views Taiwan as his. So there is a parallel. There's also a parallel in the question of, is a weak-ish Biden able to deter either? I think ultimately yes, definitely, but smart people would disagree with me on that.
Well, and of course, when we talk about the West, it's not just the U.S. that we have to consider. Is the Western threat something that either of these leaders views as powerful enough to kind of stop some of this behavior?
Yes, I think both. Putin, the trading relationship between the EU and Russia is enormous. Putin really values and has tried to peel off the Europeans from the U.S. continually. That's not new. What is new, and I would say one of Biden's really rare but big successes in his foreign policy, is flipping the EU from China, getting the EU to accept a very hard policy towards China. And the Chinese don't like that. The Chinese, in turn, are increasingly feeling trapped, encircled, and wanting to do something about that. So I think the role of the EU in both cases is telling, is important, and in China's case is new.
It's interesting to, talking about the military problems surrounding Taiwan is so fascinating. I love the book by Admiral Stavridis, 2034. But the less exciting economic dominance that China is likely to exert over the next 2 or 3 decades is probably more powerful. How do you view China's growth as an economic force?
Well, interestingly, we have some red herrings every year, things people think are threats that we don't think is a threat. Taiwan's one of them. We don't see real tensions flaring in Taiwan this year simply because there's too much risk to Xi Jinping if he tries to take Taiwan by force. But what we do believe is that China, the biggest threat to Taiwan is China's inexorable economic growth in coming years and decades. When you have an 800-pound gorilla on your doorstep, it's hard not to feed the 800-pound gorilla. And Taiwan is going to have that problem moving forward. China's economic strength is often not sufficiently factored in throughout Northeast and especially Southeast Asia. One will increasingly think, I think, whether you like it or not, of at least Southeast Asia as China's backyard. Now, that's not good news to the viewers I know in Southeast Asia. There's going to be a lot of debate on that in coming years. But geopolitics shows us over the years, when you have a country all that powerful, it's very hard not to create some kind of sphere of influence, to use a kind of a four-letter word.
Cliff, the German.
Yep.
The German government right now in press conference making a statement that it expects a political solution in the Russia-Ukraine conflict. So either they agree with your view here, or they obviously can't say we're headed for a military conflict. How does Germany play into this? Because, this country is reliant on Russian gas. They need there to be no military conflict.
Germany is an interesting case. They do need there to be no military conflict. Breaking news, Germany doesn't expect war. It doesn't really set me back too much. But the issue here, in part, is Nord Stream, this big gas line, Nord Stream 2, that the Russians are building to Germany, will even further increase Germany's dependence on Russia. And that's what Senator Cruz is creating such a ruckus about on Capitol Hill, something none of us like. The Germans are dependent on Russia for gas. They've been that way since the Cold War. They've been that way for 60 years. And we're not going to change that. I think, thing to watch on Germany over coming years is to what extent they're able to pursue an independent foreign policy. I think under Scholz, I think they will. I think with the Greens in the government, this is it's a very sophisticated German foreign policy with a bunch of sophisticated players that have their eyes open about Russia. So I think as long as Biden's president and Scholz is running the show in Germany, we're going to see a realistic, within the bands of what the Germans can do, a realistically tough German policy towards Russia.
Cliff, thank you very much. It was interesting in the context of the Russia-EU relations to see those LNG tankers turning course, switching course. They were heading for Asia, but then deciding from Australia, from the US, from Qatar to head to Europe instead. We'll see how that develops. Cliff, thanks very much for joining us. Cliff Kupchan, Eurasia Group Chairman, thanking him very much for his insights this morning. Coming up on the programme, we stick with this same theme. We continue to assess the risks in 2022 with Eurasia Group. We'll talk to Diana Fox Carney, Senior Advisor at Eurasia Group. We'll get her take on environmental risks and the climate threat in the year ahead. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the principal room. Coming up later today, Lori Calvasina, RBC Capital Markets Head of U.S. Equity Strategy. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz in New York with Anna Edwards in London and Matt Miller in Berlin. Well, as the world transitions to renewable energy, Eurasia Group predicts higher energy prices for consumers and a near-term policy collision with climate goals. Diana Fox Carney, Eurasia Group Senior Advisor, joins us now with more on Eurasia's top risks report. Diana, great to speak with you. In this report, climate is one of those top crises that you say demands a global response but has failed to achieve one. Given what we've seen in the last 12 months, are you optimistic we'll make more progress toward that end in the year ahead?
Absolutely. My overall sense is one of optimism. I think COP26 in November last year put us in the best position we've ever been in on climate. In terms of agreement that we need to take action. Unfortunately, we're also in the worst position in terms of climate impact and where we stand and the current levels of GHG. So we've got this kind of contradiction of what is going on. This year, things are particularly tough. As you mentioned, the price of fuel has gone up, particularly in Europe. It fell slightly towards the end of the year, and we've had a mild Christmas and New Year, so that's helped. But you've got governments struggling to ensure that people have access to fuel at prices that they can afford, while at the same time trying to ensure that there is sufficient investment in decarbonisation and that there is switching towards lower GHG fuel sources.
Diana, good morning. So how do you see governments handling these higher energy prices? Do you see governments accepting this as an indicator that investment needs to be increased, or do you see governments saying we need to cushion our consumers from these higher prices, and thereby their policy kind of moves against itself in terms of greening their energy mix? Or do you see governments doing both in some cases?
I do think it's a question of both. I think what we saw at the end of last year was kind of action on the fly. I might have said panic, but there is a panic. I mean, as you know, in the UK, many of the energy suppliers have gone under in this situation, and this can't be allowed to happen. People cannot be cut off from their energy supply. So governments have scrambled. They've been using all sorts of tax reallocation and other methods to try and keep prices manageable. This is particularly in Europe. And I don't think this is a sort of long-term strategic move to try and figure out how this fits into decarbonization. This is an immediate need that they're responding to. So the challenge here is obviously that there are mixed signals for investors. There's also we're not getting the benefit, if you like, of the higher prices in terms of people reducing their use of fossil fuels. So we do need to see an increase in fossil fuel prices, but the kind of shock of the size of the increase was such that there was a scramble. And I think this really just shows that there isn't an agreed picture on how we are going to transition. We don't really understand what the runoff from fossil fuels is going to be, how that's fully going to be encouraged, how we're going to get the right amount of investment into the renewable sector. Because unfortunately, we are in a situation, despite my optimism, that emissions rose in 2021 by around 5%, and emissions need to decline by 7% year on year for the next decade to give us a hope of meeting our 2030 targets.
Okay, so it does seem from here, Diana, that there could be what people would describe as a just transition, so maybe a calmer transition, a more orderly one where certain groups are protected, who are less able to protect themselves, or there could be a very disorderly transition. When do we get a sense of just how orderly this will be? How soon do we get that sense?
You know, I would argue that we already know that it's going to be disorderly. I mean, I think this is disorderly. I think the challenge is that if we don't keep people on side, we will delay the transition further. This is a sort of delicate balance. You have to cushion the blows for people, but to keep them on side. Otherwise, people are going to blame renewables for this difficulty that they're facing. They're going to fall. Their support is going to fall away, and we're going to have a much more disruptive transition later on. But I think it's wrong to say that we are still in a position that we can have a fully orderly transition. I think this is evidence that it's tough, that we don't really understand how to ensure that the poorer groups can maintain their standard of living as this transition takes place.
It's a good point. And, you know, I'm getting ready to move back to the U.S., and the devil in me is excited about cheap $3 a gallon gas. I can get a giant V8 and drive all over the country. On the other hand, I know that that's not cheap for a lot of Americans, $3 or $4, even though from my vantage point here in Germany, you know, I'm paying $7 a gallon. So does that need to change in terms of the pricing that we have in the biggest economy in the world for gasoline? Do they need to do more to build out the EV infrastructure?
Listen, as you know, when you sit in Europe, I mean, I'm in Canada, but I'm originally from the UK. We look at the US and Canada and say, listen, the gas prices have to be higher. This is crazy. Is that going to happen? I really don't think so. I mean, I don't think that the administration is in a strong enough position or sufficiently dedicated that it's going to make those changes in the next little while. We've got the midterms coming up. Obviously, that is a big issue. Yes, the EV build-out needs to be there, and I do think there's lots of enthusiasm around electric vehicles, but it takes a long time to shift these fleets over to EVs. And I do think the Biden administration, by suggesting that all federal vehicles will be electric in reasonably short order, they're doing what they can in this space, and there is a lot of enthusiasm. There is investment going in. We've seen a lot of investment, obviously, into that space. So things are taking place, but it's not at this sort of scientific, strategic level of us saying this is where we need to be. And in order to do that, the gas price has to be here, the EV build-out has to look like this. We know how it has to take place. We're still kind of shoveling around, trying to find opportunities, trying to hope that people see the inevitability of the transition, and where they can, those who can, make the decision to switch to EVs, to change to heat pumps, to do the things that are required. But the regulation isn't there.
Diana, thanks so much. Thanks for joining us. Diana Fox Carney, Eurasia Group Senior Advisor, joining us very early from there in Canada. Now, coming up on the programme, more on Eurasia's top risks later in programming with Ian Bremer, Eurasia Group and G0 Media President. So that's at 6:30 a.m. in New York, 11:30 London. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Anna Edwards in London, but soon I won't be. I'm flying back to the United States of America, Anna, and I'm wondering, is it safe to go there? Can I land safely even if 5G is operational? Because, the airlines are saying it's dangerous.
Yeah, they're also warning of delays, so you should check your timetable, Matt. I'm watching European gas prices. We've seen 8 days of falls for European gas prices, which is useful if you're tracking the inflation story, and worth mentioning. We are seeing a fairly flat price this morning, but certainly a story we will return to. More Bloomberg Surveillance is ahead. This is Bloomberg.